Okay, in this video, I'm going to show you how exactly to invest in an ETF. So I'm going to basically buy an ETF on my phone. So let's get started. I'm on my trading app. So I'm using my trading app and I have different possibilities here. For example, I can browse for some specific stocks. I can choose here stocks. I can choose ETFs, crypto, derivatives, bonds, and so on and so on. So we're going to choose ETFs. Now, if I go here into ETFs, it's going to have a multitude of ETFs. So, for example, if I want to choose an industry, as I said in the previous video where I explained what ETFs are and what are the risks of investing in ETFs, what are the positive side, what's the difference between ETFs and mutual funds, so far and so on. Check out the previous video. Now, here, we're going to talk about how to buy a specific ETF. For example, you can choose different industries. Now, here are 2,704 results for industries across different sectors: alcohol and tobacco, aviation, banking and finance, biotechnology, so far and so on, so far and so on. So a lot of them. Check them out on your own. Region. Now, do I want to invest in Asia Pacific, Australia, Europe, France, Germany, global, Italy, so far and so on, North America even. So let's say we want to invest in North America. So let's hit apply. And from the get-go, I'm going to get here the S&P 500 ETFs. Now, you're going to see here that most of them have a ACC at the end. This means accumulative. Some of them have a DIST at the end. This means distributive. Now, what does this mean? Because these ETFs have a large package of stocks in them, some of them do yield dividends. Now, there's two things that can happen to those dividends. Either you're going to get those dividends, this where it says distributed or DIST, is what it means. The dividends from those companies will be distributed to you. Now, this will not be distributed as soon as those specific companies yield, or it's their not the X date, but the pay date, but when the ETF does pay those dividends. Now, if it stands accumulative, then those dividends will be automatically reinvested. So obviously there are some tax benefits to this. If you want to have your dividends automatically invested, then you would choose a ACC ETF. If not, you will choose a distributed ETF, and you will receive those dividends, and you can check out when those dividends will occur. Now, a accumulating ETF, for example, the S&P 500, right here, US dividend, is, let's say it's currently at a 5-year, or the maximum, but it's pretty much a 5-year. So from 2020 till now, it has a 101% accumulation. Now, if I take roughly the same one, which is this one, you will see that it has only a 89.39 something. So what you will say, okay, the other one performed better. Well, not quite. The other one just reinvested those dividends, and maybe it did perform better because of this. But this one took those dividends, gave them to you. So each time the dividend was paid, it has reduced this ETF's, where do you have it? This ETF's profitability. But you did get that money, so you kind of won on that part, but your ETF is down on its progression. Now, let's go through that ETF, and let's say we want a accumulating one. So let's go through it a bit. We have the fund size. So how much money is in this ETF? The more, the better, because the safer it is. But at 106 billion, you could assume it's pretty safe. Now, next up down here is the issuer, and it is iShares. iShares is just a company that issues ETFs. The annual cost, which is the most important, it is 0.07%. So it's not even 1% of that of the value. Now remember, this is going to be deducted at each end of the year from your. It's going to have a cost. The maintenance of this ETF is going to have a cost. It's going to cost you 0.07% from the value hold. You can see here that the dividend method is accumulating. It has an opening and a closing bid from the previous date. It has a current bid and an ask price. You want to buy something, you're always going to buy it at the ask price. You want to sell it, you're going to sell it at the bid price. So So what does this ETF hold? And let's check into it. It says right here that the top 5 companies represent 27% of the ETF. Now, ETF, it has a large basket. For example, this one holds 510 companies. For some reason, it holds more than 500 companies, so more than the S&P 500 for some reason. But the biggest position in this ETF is currently NVIDIA with 7%. So each time you buy this ETF, 7% of that, let's say you invested $100, $7 is going to go to NVIDIA. Then Microsoft also going to receive roughly $7. Apple is going to receive $6. Amazon $4. Meta Platforms $3. Broadcom, Alphabet, Berkshire Hathaway, Tesla, Alphabet C once more, JP Morgan Chase, a bank, Eli Lilly, a pharmaceutical, Visa, Netflix, Exxon, MasterCard, so on, so on, so on. So basically, when you're investing in an ETF, you're buying, or the holders of the ETF go out there and buy shares. Now, they don't buy it at exactly the same time, but they do buy it then shortly after. So let's what more do you need to know? Industries, top sector, information technology, financial, consumer goods is 14%, information technology is 33%, financials 14%, consumer goods 10%, telecommunications 10%, healthcare 9%, and then industrials 8.70, 57% consumer staples, utilities 2.33%, real estate materials, and so forth. And also hold cash and diversify. So this is why it's holding over 500 companies. Actually, it's also holding some sort of cash via bonds, most obviously. Now, let's take a look at the countries. It's 100% United States and a little bit of Ireland there. Okay, so how do we buy this ETF? There's two possibilities. You could either create a savings plan where, for example, invest 100 euros in my case, and it's going to be weekly, twice a month, monthly, or every 3 months. You just choose what. When should it start? Should it start at the start of the month, at the middle of the month, so on and so on. And then it will basically take that money from your bank account or from your brokerage account if you have it there, and just invest on a regular basis, which is called DCA, which stands for dollar cost averaging. You're averaging your way into investing each time you invest in the same amount. Okay, so what else I wanted to show you? Buying. Now, I'm going to buy this ETF. I'm going to buy one share of this ETF, which costs 566.48 euros. So, ETFs are not that volatile. You can see the price jumping around there. But what I usually do, I just don't just buy one share and hit next. What I do is try to buy at the limit. So, going to make a different video what they mean, but basically it will execute at the limit set. So I'm going to set this at the 566.48. Oops. 5 limit, next. Shares 1, next. I'm going to make this contract valuable for 1 year. Now here are the costs and the fees. I'm going to pay €1 for this execution, and then it also has, this is very important to read, informational costs. It also has the bank that holds that ETFs is going to charge you 1.5% because someone holds the papers for basically your evidence that you have that ETF, and is going to charge. But this charge is for 10 years, I believe. So let me just check here. Total cost of securities, and then it's going to 0%. So for example, it's divided to multiple years. Okay, so I read that, create, face recognition, and there we go. I just bought one share of, I'm not going to show you my entire portfolio right now, and I have now one share of that ETF. Okay, so I just invested $567.42. Now, if I want to dollar cost average into it, I can also invest whatever amount I want. So I don't have to buy one entire share. I could just buy fractions of a share each week, twice a month, sorry about that, or each month, or every third month, or so on and so on. Okay, So this is how you buy an ETF. Hope you enjoyed this video. Like and subscribe. I'm NoVM, and I'm trying to build wealth here. So definitely follow along. Catch you next time. Stay safe out there. Bye 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 bye.